This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC Plus has agreed to further raise oil production from October as its leader Saudi Arabia pushes to regain market share, while slowing the pace of increases compared with previous months due to an anticipated weakening of global demand. OPEC Plus has been increasing production since April after years of cuts to support the oil market, but the Sunday decision to further boost output came as a surprise amid a likely looming oil glut in the Northern Hemisphere winter months. 8 members of OPEC Plus agreed on Sunday in an online meeting to raise production from October by 137,000 barrels per day, it said in a statement, much lower than the monthly increases of about 555,000 barrels of oil per day for September and August and 411,000 barrels of oil per day in July and June.
New sanctions on buyers of Russian oil could disrupt crude flows, energy trader Gunvor's global head of research and analysis, Frederick Lassaret, said on Monday. His comments came after US President Donald Trump, who is seeking to broker an end to the Ukraine conflict, said he is ready to move to a second phase of sanctioning Russia to hit Moscow's oil revenue and bring President Vladimir Putin to the negotiating table. Treasury Secretary Scott Bessent said on Sunday that the US and the European Union could heap secondary tariffs on the countries that buy Russian oil.
Moving on to the top news in the energy sector.
The US solar industry is at risk of installing 27% less capacity between 2026 and 2030 than before the passage of President Donald Trump's tax law that rolled back subsidies for such projects, a key trade group said in a report on Monday. The forecast by the Solar Energy Industries Association and energy research firm Wood Mackenzie follows moves by Trump's administration to stymie development of clean energy industries that was the cornerstone of former President Joe Biden's climate change agenda. Instead of unleashing this American economic engine, the Trump administration is deliberately stifling investment, which is raising energy costs for families and businesses, and jeopardizing the reliability of our electric grid, Abigail Ross-Hopper, president and CEO of the group, said in a statement.
India has cancelled grid access for nearly 17 gigawatts, GW, of delayed clean energy projects to prioritize connections for those that are operational or nearing completion, according to a source familiar with the matter and official documents reviewed by Reuters. The state-run Central Transmission Utility of India Limited, CTUIL, informed companies including Adani Green Energy, Renew Power, NTPC, Avada Group, JSW Energy, and Acme Solar about the cancellations, the documents show. The affected projects are located in renewable-rich states such as Rajasthan, western Gujarat, and Madhya Pradesh in central India, according to a document from the federal agency overseeing interstate transmission access. Next, we have the top news in metal markets. Iron ore futures rose for a fifth straight session on Monday, supported by a sharp fall in shipments from a major supplier and resilient steel exports in top consumer China. The most traded January iron ore contract on China's Dalian Commodity Exchange closed daytime trade 0.64% higher at 792 yuan, $111.05, a metric ton. By 0831 GMT, the benchmark October iron ore on the Singapore Exchange was up 0.53% at $105.40 a ton, the highest level since July 24.
Gold held firm near an all-time high on Monday, inching closer to a key $3,600 level, bolstered by mounting expectations of a U.S. Federal Reserve rate cut this month following a weaker-than-expected jobs report last week. Spot gold was up 0.2% at $3,593.79 per ounce, as of 0641 GMT. Bullion rose to a record high of $3,599.89 on Friday. U.S. gold futures for December delivery fell 0.5% to $3,634. The main driver is U.S. jobs data and the expectations now that the Fed could cut by 50 basis points in September. It's a marginal chance but a material shift from before the jobs figures, Capital.com financial market analyst Kyle Rodder said.
We will now look at the top news in the agricultural sector.
Germany's refined sugar production from beets in the 2025-26 season now starting is forecast to fall 4.9% to an estimated 4.40 million metric tons, from 4.63 million last season, Germany's Sugar Industry Association WVZ said in its first harvest forecast on Monday. The main reason was a reduction in sugar beet plantings by German farmers, it said. Analysts had expected a reduced EU sugar beet sown area as farmers turned away from the crop following a sugar price slump driven by large supplies. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.